All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market, since we spoke yesterday, market promptly dropped about 100 points. And, market was sitting up near its highs yesterday. Two big days, kind of a historic 2 day rally in terms of the magnitude there. And then, just about 20 minutes before the close of the market yesterday, we saw a 100-point drop in the S&P, and let's face it, it wasn't all that big. And we're just dealing with a market right now where 100 points is just not what it used to be. In fact, it used to be, last year that when the market moved 30 points, everyone went, whoa, what's the news? What's going on? What's happening here? Something's changing things. Now 100 points, whatever. Probably not even any news behind it to really even look at. And, that's just the reality of the market we are in right now and some of the uncertain situation that is out there. And so market, weakened into the close. We saw S&P futures. They fell here overnight. In fact, they were down around 65 points. And then we had the jobless claims number come in. And if you take a look, and I'll zoom in, the jobless claims number came in when S&P futures hit their lows. Since the jobless claims number, S&P futures have rallied almost 70 points as they continue to rally as I'm speaking, and are back to basically even, showing the market is set to open a couple points higher. Historic jobless claims number. What was it? 3 point some million people filing for unemployment, 4 times the prior record. Just a massive number. The market knew it was coming. It's not like the market's sitting there going, "Whoa, that was insane." No, the market knew it was coming. It's one of those things where the negative data that is going to be for the next several months is not going to catch the market off guard. But one of the things we talked about last week is, how does the market react to this very negative data? Does it buy the bad news? So far this morning, it's buying the bad news. If you're bullish and you're looking at this morning's action, you're going, that's pretty good. That's what you want to see. You want to see the bad news get bought up and show that, okay, the bad news has been priced in here to this market. And, if we just look at the last 30 minutes of action, we can say that to a small degree. Not to a massive degree, but to a small degree. We'll see how the day ultimately plays on out. But that is kind of the headline element that's out there. The volatility just remains, off the charts volatility right now. We saw the big rally yesterday. I mentioned my concern with the rally yesterday was that the volatility index, the VIX, was still higher. With the 100-point drop, the VIX continued to go up just a little bit. But this morning, the VIX is set to fall about 2 points, so nothing too crazy there. But we'll see where that goes. If we are able to see the market, grab some gains here today, see that VIX drop, see some of the price action within a 60 to 80 point range instead of a 130 to 160 point range, I think we can talk about things turning for the bulls. But so far, we're still just talking about a relief bounce that is out there and in the market right now, and not a heck of a whole lot more there to it. But certainly could be with some of the bad news buying that we are seeing going on here this morning. We'll continue to see bonds go up. Gold is going up on this news. I'm very interested to see if we have any differentiation in stock pricing out there today. Whether we see some sectors lower, some sectors higher. If we actually see fund differentiation, fund managers coming in and buying certain areas and ignoring other areas. So far, it's pretty much outside of a few stocks. It's been all in or all out, which is typically a sign that there's not a lot of differentiation, not a lot of that kind of stock picking game going on, which is normal during these times. But when you see that stock picking game come back, that's when you start to see, okay, market stabilize. And so far, that's not happening here for the markets. As we go forward today, it's a day where a lot is going to be made out of the Senate bill, the stimulus, the record stimulus that was signed by the Senate last night. It is one of those again where we see just gobs of money being thrown at the economy, at different areas of the economy, and not just by the U.S., but by the rest of the world. And it's only going to continue. And we're only going to see more money thrown at the system. And it's money that the system has never seen in this relative portion. And something that, yeah, we could talk all we want about the short term action and, all right, what's it do today? What's it do tomorrow? But the long term ramifications here are very simple. We are either going to see an absolute meltdown because, hey, you know what? Coronavirus takes over. We lose 25% of the population and, essentially a zombie apocalypse type scenario. Or things kind of return to normal. And with this much money in the system, and as the velocity of money spins, we will see stock prices just hit absolute records, and we will be talking about gains in the stock market that dwarf what we saw on this little relief bounce over the last day and a half. So, keep that in mind as we go forward. And, it's not like we're out of the woods or anything else like that. If you look at the corona data, it still continues to worsen. Eyes continue to be on Italy to kind of gauge the life cycle of this thing. And there are a lot of different opinions and a lot of uncertainty still with all of that and the time frame of all of that. But there is some optimism starting to come back into the markets, especially when you look at some of the stocks that have been left for dead, like a Boeing or a Disney or a Royal Caribbean or an American Airlines, even a Starbucks. But there's still a long process to go here. For the markets. Now, for the challenge, we saw a very heavy ratio of stocks moving up yesterday, crossing the 3 and the 7 day moving averages. In fact, the S&P did it, where the 3-day moving average moved up above the 7-day moving average. Now, the close of the market yesterday, the drop that we saw into the close, did push those moving averages, so they weren't crossing. We saw that with several things, so we'll probably get those crossovers with a little bit of rally here today. But again, most of them coming off of new lows. So sets up the board for either some bearish trades on the next downside crossover, or potential small downside crossovers followed by a secondary upside crossover with higher lows that give us a trade to the upside. Hopefully, by the time those signal, we are talking about options that are a little more reasonable. They're not going to go back to what they've been. That's going to take a long time for that to happen, but at least getting to where, okay, if stocks are trading through their average true ranges, then the risk-reward ratio on the options is pretty solid. So we'll look for that to come in, here today and tomorrow. And most likely, though, from a realistic standpoint, we're probably not talking about a lot of signals on the upside coming in till, early next week. On the downside, we could see them as early as today and tomorrow if the market does go that way. So we'll see how that shapes on up and go from there. I will jump on video here this afternoon, probably about an hour before the normal time. The video will be posted before the normal time. If there's a trade that's setting up, I will wait and jump onto the normal time just to make sure the trigger's there and go. But either way, there will be a video recorded and posted at the normal time, or I will be on live here at the normal time. Hope each one of you are staying safe. I know many people, your lives are disrupted right now, and that is something that is pervasive across the world right now. And so, hope you're staying safe. You and your family are well, and wish you the best. We'll talk to you later. Take care.